Hi, before the end of this year, make sure you wish for a better 2021 for all of us. But for yourself, for 2020 taxes, we want to give you a couple of pointers right here. With those pointers, you can save more taxes and be more efficient with your payment to IRS. So listen up, get cracking. I know some of those pointers we have here maybe can go a little deeper, and we don't have time today to go deeper, but you always know that you can go to our YouTube channel, right? So things to consider, okay? If you have already done tax planning with community CPA, stay with your plan, because when we did tax planning for you, we have already considered your history and the CARES Act and the special circumstances of your business. So you stay where you are, because we have done so many tax planning for so many businesses already. So those are the folks, and you rest assured, and if there's any changes to your plan, we would already told you, so you should stay put. And the people that who never done tax planning with anybody, and or the business owners who had never done planning with community CPA, and this is the time that for you to consider whether those pointers I gave you deserve to be looked at further. And you know that the Trump's administration, the Biden administration, is already started to transition. And how much do you know about Biden's tax changes? And if you sit there goes, I don't know. I don't know what's going to happen. If you are the one saying you don't know, that just tells you that the 2020 tax planning that we do already considered what might be happening in 2021. But in the end, the president gonna change, the tax laws gonna change, and the things like pandemic gonna happen. And the best bet you have to always pay taxes efficiently, it is to find a good planner, to find someone who are really breathing the taxes and making it a lifestyle. Like people like me, I don't really consider reading tax code and doing, getting understanding of what CARES Act is even a job. It is something that I'm so interested to know. So it's coming as a second nature to me. And I don't, you need to find people who are in that kind of mindset to be your advisor. Otherwise, you're really taking a gambling of their life circumstances. One day they like to learn, the other day they don't. They quit their job, so they don't really want to serve you anymore. Those drama, you don't need it. You need someone who really just love what they're doing and is part of their life. So I'll tell you, I am one of those. So let's look at the number one pointers I want to give you. And so with Biden's changes, to generalize Biden's changes, Biden trying to raise taxes on business and the people at a certain level of income. For larger businesses, for more over $400,000 AGI on individual. So his goal is that these people made enough money and maybe they don't care to pay more taxes. So let's tax them more, but let's give more benefit to more children and more family. So that's the spirit of Biden's tax planning. And Trump's tax planning back in 2016, when he was running for president, 2018, he passed the Job Act. What he did is he cut taxes for large corporations, and he lowered tax rate at the top bracket of the income. So if you are making $600,000, and with Trump's taxes, you're literally saving on every $100,000, you're saving about $40,000 on taxes. So huge tax saving for people who are really doing well. And so different philosophy, and right or wrong, I don't even care to comment. What I do care to comment is that it doesn't matter who is there, and you want to find a good tax planning person to do your planning, and you need to do planning every year. 2020, And I've been in tax practice for how many years now? And I will tell you that I have never ever saw a year like 2020. 2020 is the year that you really need to plan. If you have never done planning, this is the year you need to. So number one, do you know about QPI, qualified property improvement? If you are in business and you improve the property, for example, if you are in business, you are a dentist and you did a dental office um, renovation. So that is classified as a QPI in 2020, and you should fully depreciate that. That means if you spend 250,000 to renovate your office in 2020, and you can write that off right there, right now, have $250,000 expenses. So that's number one. Why is that important? Let me tell you why that is important. Because when you have that loss, maybe you say, well, if I do that, I'm actually going to have a huge loss. And you think that's okay? Absolutely okay for 2020, because in 2020 you can go back, CARES Act, you can go back 5 years to offset the loss you have, the 250,000, to the past year's profit. So let's say the past 5 years, the only year I made money was 2015. Then I will take my $250,000 loss, offset my $250,000 gain in 2015, and I'll get all the tax refund back. And you know what IRS said? IRS said that you don't need to amend your taxes and you will get your refund in 90 days once you apply. Folks, if you don't know QPI and you don't know net operating loss carry back for 5 years, CARES Act rule, you miss it. And you probably thinking that, oh, well, I want to save it for the future deduction, so I'm not going to write it all off. I'm going to use 39.5 years depreciation and slowly deduct it. Of course, you can do that. But to be efficient, to be tax efficient, you're looking at going back to get your taxes that you paid back from the past. So one pointer. The other pointer we have for you is PPP forgiveness. And a lot of you got PPP. And remember what I say right here. If you get forgiven, if you receive the SBA note, told you that it's forgiven, that means your PPP, the money you paid, the payroll you paid using PPP dollar amount, that expenses, that chunk of expenses cannot be deducted again. So let's say your PPP is 50,000. You got forgiveness approved. So you have to take away $50,000 payroll out of your 2020 financial statement. So you have a $50,000 more income than what you otherwise would. So why am I mentioning that to you? I am mentioning that to you because your forgiveness, if it didn't come in 2020, that means it is a loan. It is still a loan. So your 50,000 expenses can still be deducted and you don't have a gain. And you're in 2021. So 2021 comes around, maybe you got forgiven in February of 2021, then that's when you would add this one to be income, but you have a whole year to figure out how well you are doing. Who knows, maybe pandemic gonna go all the way to the end of next year. Then you will not have that much income to be worried about, and your other income for the PPP should be okay. Maybe you are getting more assistance from the government. We're talking about in the time like this, I want you to have a short vision. Don't try to look to another year, another 10 years, another 100 years. You don't plan that, because in tax world, if you plan like that, you are just, you're silly. You have no brain. I don't know why you would plan taxes beyond 1 year. And you know that when the president comes around, it all changes. And you know that they can pass tax code and whatever stimulus package, whatever comes in, that changes your game. So why are you not caring about today? Why are you not caring about getting all these pointers done before the end of 2020? So PPP is my second pointer. You need to know that when you like to be forgiven, and if you know that if you have a loss, you can go back to get more money back. And this is only available to 2020. Don't think of 2021 still have the same deal. No, it didn't. It do not have. Okay. So if you can push away PPP forgiveness to next year, and this year you deduct your expenses as normal, and you had a loss because business is not as good, that is wonderful. Well, it's not wonderful, but it's okay because we can go back to get some tax refund back. Plan. This is where I say, how do you not plan? Why are you not planning? I don't understand what you're talking about. And here, my third pointer, EIDL loan. EIDL loan, someone got EIDL loan. Okay, that's a loan, folks. Don't try to put that in your income. So that should stay on your balance sheet. And you can use EIDL loan for all kind of expenses, but not for anything doesn't belong to working capital. It need to be a working capital, means you can use that buy inventory, you can use that pay salary, you can use that to pay gasoline, rent, anything on working capital. The word of working capital, if capital confuses you, just think of working. It has to be something that is running. Okay, so you can use that to pay these expenses, and you can still use those expenses to reduce your income, so create a loss. And when you have this loss, especially restaurant owners, I mean, you used to run good restaurant, but with this pandemic, how could you run as good of a restaurant like before? It's impossible. So you might be the right candidate to go back 5 years to get all your taxes that you paid back. All right, so that's our third pointers for number one. It was for the number one, it was qualified improvement property. Number two is the PPP. Number three is the EIDL loan. And on the NOL, which I talked about that when I was talking about the qualified improvement property stuff. And let me just clarify this NOL for you as well right here. And know that the CARES Act said if you have a loss in 2019 and 2020, both years, if you have a loss on these both years, you can go back 5 years to take the taxes back. So for 2019, when we did our clients, because CARES Act came out on March 27th this year. So at that time, a lot of our business clients didn't file taxes yet. So we already implemented 2019. So basically, if 2019 I have a loss, I can go back 5 years, which means the one that I can get money back is 2014 for the back, for that far back. But for 2020, it is 2015. So you can take 15, 16, 17, 18, 19, and to get that back. So this is a NOL, and I want to make sure that you know you don't need to file amendment, and don't listen to someone who tells you that, oh no, we don't want to do this because you have to file amendment. That's very dangerous. You'll be get audited. Whoever talked to you like that, you just fire them because they did not study. Okay, there is no need for amendment. It is literally a form, and you file it, and then you get refund in 90 days. Promise from IRS. So, and the other thing, the planner pointer we want to give you is to remind you about the state grants. Did you got state grants? Do you know that most of the state grants, 99.9999%, they are taxable? So you want, when I say taxable, I'm not talking about sales tax. I'm talking about income tax. So in your tax return, you need to add that to be other income. Okay, and don't accidentally put them with your regular income, because that's really not the right way to report your income. You have a place to put other income and to put the state grants there. All right, and do you know about the other pointer is payroll tax deferrals? Do you know anything about that? And if you have employees in your company, you should know that you could save a lot of money. I mean, for example, the payroll deferral has two types. One is called payroll deferral for employer, and there's another one called payroll deferral for employee. I also call that payroll tax holiday. And so those are the ones that will save your taxes right now, and deferral, right? So it's not written off, so you can pay that later into next year. And remember, when you do the payroll deferral, you still deduct all your payroll expenses. And it just become an item on your payable where you need to remember to pay them in 2021 and 2022, but the expenses is still there for you. So make sure and you understand what's payroll deferral. Okay, that's my other pointer. Now let's kind of get into the personal side a little bit. And a important one is to remind you the stimulus check you received, the one with the Statue of Liberty and the check comes in, and that stimulus check you got like this year and from July to September, remember that money? And you don't need to add into your taxable income. That is not a income. That is not taxable income. Don't need to report that, and just keep in mind. And also, if you are a taxpayer and you didn't get it, and because you were making too much in 2019, but 2020 is a different story, know that when you file your 2020, you're going to get it. Okay, so really for that stimulus check from CARES Act, you have a 3 shot. You can get it with 2018 taxes, you can get it from 2019 taxes, or you can get it with your 2020 taxes, but you don't get it 3 times. You get it 1 time. Any of these ones you qualify, you would get it. So keep in mind, you should have it. Of course, $500 for your babies, right? And you will get that too. If you received unemployment benefit, and that is your 2020 income, okay? And you probably need to know that they did not withhold your taxes. So you might end up paying some taxes in 2020. So when you plan your taxes, you want to know, you want to calculate that piece and get that paid before the end of the year. Don't wait until you file taxes to pay, and do it now. The reason is when you do it now, when you do the state calculation, you can actually bring in how much taxes you paid for the federal, and that will give you some credit at the state level. So we always encourage people to pay taxes before December. Pay the taxes in the year they belongs to, and don't drag into next year. And also, some people, the elderlies, and you might have what we call the minimum distribution requirement for your IRA, like minimum RMD, required minimum distribution. And that is something, rain or shine, you have to take it out. They don't allow you to not. And for 2020, you don't have to. You can literally return the money, tell them that you don't need it, and so that way you don't have that as taxable. So those are more on the personal pointers for you. And of course, anybody knows about early withdrawal for 401k? And are you sure you don't know what that is? This is so cool. Okay, when you withdraw 401k, maybe you did because we didn't do good, we need money, so you did withdraw. And if you did that, Do you know that if you tell the financial institution your withdrawal is a hardship withdrawal, COVID related, if you tell them they give you the withdrawal based on that, number one, you don't have the 10% penalty. Number two, you only need to pay 1/3 of the total in income tax filing. The other 2/3, you can spread it out to be paid in 2021 and 2022. Isn't that cool? And I know a business client, and they were so unlucky that they didn't get any EIDL loan. So what they did is they withdraw their 401k. They withdrew the maximum $100,000, but they only need to pay income taxes in 2020 for $33,000. The other ones are going into in the future years to pay taxes. So that is the benefit from CARES Act. CARES Act loaded with so many tax benefit you really do need to know, right? And you also know that in CARES Act, it gives you a $300 donation deduction, not the same as you put on the Schedule A. This is the $300 to offset your income before your Schedule A. So you know how we have AGI? We always call that before AGI and above is above the line. When you deduct above the line, your tax rate is changing because your tax rate is ranging from 0% to 37% right now. And Biden proposing that to be 39.6%. So he is raising the gap on the top bracket. And so when you pay taxes, sometimes you give yourself a little bit of reduction, then you belong to next tax bracket, right? So that $300, it is deducting your income above the line. That means it has a positive impact for your rate determination. So do that. Even if you have them on the Schedule A, your Schedule A itemized standard is pretty high. So maybe the donation you put in there would not do anything for you. Then take it out and start deduct them above the line. So that's the pointer too. So these are the things that I really want to point out to you related to the pointers for 2020. And some of you are wondering, okay, Ying, I know that this is good, sound like a good idea, but I am really think that I'm too late because I didn't have time to do anything. And I might still be able to plan taxes in a way that I have the maximum efficiency? The answer is yes. And the answer is that as long as you do it before the end of the year, there's always things we can do. But if you say goodbye to 2020 and get into 2021, that's limited. We are limited to options to help you because we are done with the time. So just make sure that you actually considering doing planning. You don't have to do with us. You can literally do it yourself and go to YouTube, really kind of study what we have out there. Or maybe your tax person is very smart and just mention those key pointers and see where they take you, and make sure that you do a lot of good for yourself. And I know 2020 a lot of people already lost a lot of money on the stock market. If you are a day trader, you lost the money. I don't know why you did not do mark-to-market election. So those are the things we would consider for you and when you are with us, and depend on your situation, right? So with all kind of knowledges and resources we have, and we should be able to really make you efficient. We don't do things wrong. And when you make money, you need to pay taxes. We will celebrate with you to pay taxes. Otherwise, we can't have this country the way we want it. We, of course, need to pay taxes when we need to. But if you cannot gain the kind of efficiency like how Donald Trump can gain, and then maybe you have a little bit to catch up, right? So hopefully together, we have a very efficient year of 2020, making it as best as we could. Do you agree? And right before this webinar, I actually happened to be on the internet. I was, I was watching one of the video clips from CNN, and they're talking about the Minneapolis. One Minneapolis doctor is talking about the coronavirus situation. I just cried with her, and it is so devastating. And I know tax people are just so insignificant at this time. We're just doing taxes. We can't save people's life, but we will do what we know how to do. So if you come to us, and we will help you. And that's my today's webinar. And stay safe. Wear mask, would you? Okay, and protect yourself, and protect people around you, and focus on your business. There's a lot of things you cannot change. We cannot change coronavirus situation rapidly ourselves. It become the way it is. And but change what you can change, which is to utilize all the tax regulations that are out there and giving to the small businesses. And if you don't take advantage of that, it's nobody's fault. It's nobody's fault. It's yours. Okay, so I'll hope to see you doing good. And when you are doing good, when you got a positive result from the little webinars, helps you got from Community CPA, tell us that. Go to YouTube, put in the good comments, and go on to Google, find us, put in the comments for us. We'd love to hear you. Every those positive comments to us is an encouragement for us to continue doing what we're doing, and building a knowledge network that we left no one behind. We're going with you together. Okay. Thank you so much for being with me. And I will see you again on Saturday. Bye.